Hey traders and investors, it's Serge Berger here. What I want to look at today is Amazon.com, ticker symbol AMZN. And basically what I'm looking at here is a stock that to me looks like it has more downside to test, i.e. it has to do more mean reversion work. Okay, and mean reversion work is some of the most powerful type of price action that we can take advantage of as active traders or active investors, I should say. So let's have a look at this opportunity here that I'm currently seeing in Amazon. So first of all, you'll note that this is just using a very basic chart or arithmetic chart, not a logarithmic chart. So you can see basically just if we just draw a very simple support line down from 2009, you can see the stock has a lot more mean reversion to do. If we're having a logarithmic chart, the stock probably to mean revert a little bit would probably have to fall at least towards the 200-day moving average, which currently resides around $325, $326 area, but even better so, somewhere towards the $310 area. So that's sort of what I'm looking for a mean reversion move. The stock very simply has risen too sharply here, basically in the second half or the last quarter, last few months of 2013. So that's my base case. Let's look at the stock a little bit more closer up and understand why this is also giving us clues in a more near-term time frame that the stock looks like it's ready to fall a little bit more. So first of all, let's understand that the stock reported earnings on January 30th, and if we zoom in, you can see that the stock on that day fell pretty nasty, about 10 or 11%. Then it continued selling off another day on the first trading day of February. What it's done in the meantime, though, is not a whole lot. All it's done is given us a couple of sort of bouncy type of candles. The stock then did move higher, but it found resistance here, right at its 100-day moving average. Let me zoom in even closer. You can see the 100-day moving average here is this blue line. We've also left a couple of doji candles unchanged, i.e. sort of non-committed candles, and the stock since has worked its way lower, most notably yesterday, February 19th. So what we're looking at now is a stock that is holding on to very thin support, and arguably yesterday intraday actually already kind of dipped below it, and it's got this sort of diagonal resistance thing. So basically this consolidation area here looks to be more bearish than bullish. Now a higher probability trade would set up if the stock were to fall below the support area around 346, but I'm afraid that if and when it does so, it's going to happen very quickly. So there's several ways of doing this using options or partially legging into a trade. For my part, what I'm looking for is the stock to potentially make a move down to its 200-day moving average area, which I said before is around 325 and dollars or so, and then we'll see if the stock can continue moving lower towards the 310. But a first target around 200-day moving average 325, 326 is my area. I hope this makes sense. Any questions, as always, please tweet me at the Twitter handle SteadyTrader. Take care.